Hey, what's going on, y'all? I just wanted to play this video for y'all to show you how to create a Robinhood account. This guy, he's going to talk about buying calls, buying puts, adding calls and puts to your watch list where you can just paper trade it, kind of, sort of, and you don't have to use your real money. That way you can practice. But I think this is a good video on how to create a Robinhood account. Now, I wouldn't take this guy advice as far as trading, and you will see towards the end. But in our other videos, we use these indicators or whatnot to actually trade. But again, this video is only to show you how to create a Robinhood account. And this video is only for people who want to trade options traders. This is not for futures traders, only for option traders. So if you're a futures trader, skip this video and I'll provide another video on how to trade the futures. But this is only for the option traders. All right, let's go ahead and start, man.
Hey, what's good? Matthew Mayo here. In this video, I'm going to show you exactly how to trade options on Robinhood using this iPhone right here. I'm going to start off by going through all the option settings and everything with you, and then we're actually going to get in and buy and sell a contract. Now sit back, relax, maybe grab your phone and download the Robinhood app so you can do this along with me and take full advantage of this video because, as you'll see later, it cost me $250 to make. All right, so here we are in the Robinhood app, and if you haven't already, the first thing that you're going to want to do is go and make sure that your account is even able or set up to trade options. So in order to do that, you're going to want to click on this little guy at the bottom right. You're going to want to click on the three little lines at the top left. Then you're going to want to, I believe, go to investing, scroll down, and then right here it says options trading level 2 for me. There are multiple levels for that. If you want anything higher than level 2, you're going to need to be on a margin account, but I am personally on a cash account so that I can make day trades every day. And right here for me, it says option setting. If you haven't already gone through what you need to go through to trade options, it'll probably say something along the lines of apply for options. And then you'll hit that, answer the questions. It's not a test. And more than likely, you'll probably get instantly approved as long as you go through the test, are honest, and don't have a super low risk tolerance, because options are not good if you have a very low risk tolerance. So do yourself a favor. If you have a very low risk tolerance, just scroll down, smash the like button, and stop watching this video because this is not for you. And now that we got that under control, we're going to click back over to the main tab. And now we're going to go over everything that you need to know before we get in and make an options trade. Currently pre-market for me. I'm currently in Portugal as I record this, so it's 101. As I'm recording this, the market doesn't open till 2:30, so you can't trade options pre and post market. So this is a great time to go.
All right, so you can only trade options during the New York session, which is 9:30 Eastern time to 4 p.m. Eastern time. You can only trade options during those time periods. You can hold the option until the next day and start trading again during that same time period. But yes, only trade options through that New York open session and close session. But futures is different. You can trade that pretty much down there 24/5, 24/6, You can trade that 24/6. I think it is closed on Saturdays, open back up on Sundays, Monday, Tuesday, Wednesday, Thursday, Friday. You can trade futures.
Go over what you need to understand going into an options trade. So we're just going to pick a stock. If you have a watch list of stocks already, it'll be down here. You can click on a stock like that just by clicking on it. Or if you're trading something that's not normally on your watch list, you can just go to the top, hit this magnifying glass, and type in the ticker symbol. And in this instance, we're going to take a look at Apple, which is AAPL. Click on it, and
If you got a company you want to trade but you don't know the ticker symbol, go to Google and, for example, you want to trade Microsoft. Go to Google, type in what is Microsoft ticker number or ticker symbol. It's going to give you the ticker symbol. You can come back to Robinhood, put it in the search box, and then it'll pop up.
And now that we're on Apple's screen, I'm going to hit trade options, and it's going to bring us to this screen. I would personally just ignore everything on this screen. Now, ignoring everything except for the dates at the top, you can see there are dates at the top. You can see today, and then if you scroll over, there are dates further out. It's currently a Friday as I am making this video, so there are contracts that expire today. These contracts in the options world are referred to as 0-day to expiration contracts or 0 DTE contracts. There is tremendous risk trading these contracts because by the end of the day, these contracts can be pretty much worthless, especially the contracts that are out of the money. So when you're trading contracts, there are going to be two kinds of contracts that we're focused on in this video. You'll notice there is a buy side and a sell side. In this video, we will only be buying contracts. Yes, we will be selling them to close them out, but we will not be doing it on this screen. So making sure we're on that buy spot, you can buy a put, which is what you want to do if you think the stock price is going to go down, and you can buy a call, which is what you would do if you think the stock price is going to go up. Now, looking at calls and assuming that the stock is going to go up, or say we thought the stock was going to go up to 195 today, but the stock is currently trading at 189.88. All the call options above this share price line are considered to be out of the money, and because of that, they are much cheaper, and at the end of the day, these will expire worthless. Or if it were one of these, it would be at the end of the contract, these would expire worthless. They have more value due to time. So looking at that contract at 195, a week out, it is $38. 2 weeks out, it's $175.
If you're beginning in options trading, listen, the safe way to trade options is you want to be close to the share price. All right. For example, Apple is 189.78. Uh, two contracts above the share price is fine. Two contracts below the share price is fine. But you want to be close by this share price. So 190, 192, and you give yourself about 7 days from whatever day it is. Give it 7 days on that expiration. You don't want to trade nothing that's close to the expiration date. The reason being, you want to give your play time to cook. Because the closer it is to the expiration date, the riskier it is. That means if you got a 195 Apple call and it expires January 26th and it's January the 25th, you got one day or probably less than one day to reach Apple to reach 195. And if it doesn't reach 195, you can lose money. Your contract expire worthless by the expiration date. All right. So you want to give it time to cook, and then if you got it close to the share price, it's safe.
If we go back to today, it's only $3. And another thing, I'm saying dollars, but it's showing cents. The reason I'm saying dollars instead of three cents or 38 cents or $1.75 is because when it comes to the price, you gotta multiply it by 100. So that's a $3 contract. So again, with the call, everything above the share price line is going to be out of the money, and everything below is in the money. And you notice as we get in the money, the contracts get more expensive because they actually have intrinsic value. So for instance, say I thought Apple was going to 195. I could buy a 190 call, and to do that, I would just click on it. I would hit buy. I would put how many contracts I want, which is just going to be one. And right here, you can see the limit price, which is the price you're paying for the contract, is showing 41 cents, and it's showing the max cost 41 cents because the limit is the highest you're willing to pay for the price. You hit review, and then you swipe up, and that submits your order. But I want to go back and focus on a few things.
All right, so when you see that price, like for example, this is saying 41 cent, you're multiplying that times 100 shares because for one contract, it's 100 shares of that company. All right. Hold on, son. Hold on. I'm busy. Hold on. Go that way. Go that way. What? I said go that way. He go that way. Carter, go that way. You messing up my video, man. So for uh again, so 41 cent is times 100 shares get you $41. So every time you see this price, when you get ready to get a option contract, multiply it times 100 shares or 100, and you're going to get this price right here. So, if, example, if it's $1.75, you multiply it times 100, and you get $175 for that contract. Or if you're not sure, just press buy, come here, and it'll show you the price right here of what that contract costs. The max you can lose on that contract is $41. The max profit is unlimited.
Things on this screen. So there is a bid price and an ask price. The bid price is if you're trying to sell out your contract, it's going to benefit you to sell at the bid price because you will be sold out of this contract right away. If you're trying to buy the contract, it's going to benefit you to buy at the ask price because it's going to fill your order right away. And stock prices fluctuate. Sometimes they can move really fast. So it's always going to be best for you to put in your order at the bid or ask if you're selling at the bid, if you're buying at the ask. Another thing to know when you buy an options contract, the most you can lose off the contract is the amount that you pay. So for instance, if I bought this contract and it expires worthless today, the most I can lose is $41 plus that 3 cents per contract. And then if Apple did happen to run up to 195, the break even is 190.41. So every penny above that is $1 of profit I made. So if it runs up to 195, this contract will be worth $500 at the end of the day, and I can sell it and I will profit it around 459 on this contract. So that's how that will work. Also, another quick fun fact, you don't have to hold it till expiration. It's actually best if you don't. Get in and get out with these contracts, but I am not a financial advisor and this is not financial advice. I'm just sharing what I know with you. Going on, if we back out, there are also puts once again. And one more thing I want to show you is if you don't want to rush into this right away and start practicing, you can actually click on, say I was looking at the 190 call and wanted to see how it expired or how it did today, or track it over time. You can click on the one where it says 190 call and hit add to watch list. And now it is on your options watch list. And then say I wanted to compare it to how the one.
That's a good way to start practicing, right? If you don't want to use your money to practice with or just start trading right away, you can do exactly like that. Just get whatever contract you like on a company, add it to the watch list, and then when you go back to the home page, it'll show you what that contract would have did as if you would have bought it with your real money. Let's just say for Apple, you add it to your watch list, $41. You didn't buy it, you just add it to your watch list. If Apple went up to 195 and it'll say that you made $400-500, that way you can see how the contract moves, how much money you would have made, or how much money you would have lost. Let's say if it went to 187, and your contract went to $21, you lost $20. You know what I'm saying? So that's a good way to actually quote unquote paper trade on Robinhood.
One for next week does today. You can click on the 190 call. It's a lot more expensive. It's about $120 more for the contract. But you can click on it, add to watch list, and now you have two contracts on your watch list. All right. And then going through the same thing, puts are going to be the same, but the opposite. Just so you see it real quick, just to run through for a put. Say we're at 189.88 and we thought it was coming down to 185. The puts are worth 78. cents per contract. So we want to add it to our watch list. Come, add to watch list. Then also do it for today's date as well. Add to watch list. And then maybe we don't just want to add to the watch list. Maybe we're actually trying to make a move today. We'll get it.
Again, if you want a shorter stock, right, you will buy a put in the money or out the money around two up, two down, these prices. Expiration date 7 days out. Right? That means you're shorting Apple. You're saying that Apple is going to fall. 9 times out of 10 is because you're using uh the indicators or the tools to tell that lets you know if Apple is at a price where it's going to fall. Let's say Apple hits a resistance level and it's starting to fall. You can come here, buy a put, and as it falls, you will make money. Then you get out. All right, as you see it's starting to hit a support level. That means it's going to probably bounce up. You know what I'm saying? So you get a put if you feel like it's going to fall. You get a call if you feel like the price is going to go up. All right. So
In, buy, put how much we want, leave it at the ask price, hit review, then swipe up to order. And we will go over and do this later. Be sure to stick around to the end because we will actually go through, buy and sell, and I will even show you my trading plan for the day on how we made our profits. So real quick, but before we stop this session of the video, I want to scroll back and show you the watch list. All right, so you can see here we have an options watch list, and they're going to show up exactly how they would if I were holding options, and they're going to give me a realistic gauge of how I would do if I traded options. So for instance, right now, we click on this. This is what it looks like when you're holding an options contract. Right now it says watch list position, but if the market were open and this were moving, if I were down on it, today's return would be down, the total return would be down. If I were up on it, you would see how much you were up. This is how it actually looks when you own the contract. So before you ever really trade any money, you can play around with this and see how you would do. So be sure to take advantage of that. And now that you know your way around everything, I want to hop into the chart, show you what I'm looking at for the day, and should everything line up, we'll make some trades. All right, so we're here. It looks like Netflix wants to play because it made this move fast. Netflix is now down here to this area where I was thinking, and as long as it doesn't break this line, I am going to look to trade this. I am probably about to grab calls right at open.
so first off, he already had a plan. He said he he would get Netflix as long as it doesn't break this line. I don't know why he has this line there, but that was his plan. If you ask me, uh, I would wait for confirmation. Wait for confirmation. That means you need to wait for the candle to close to see where uh to see what the next move is going to be. We trade what the market tells us, and we take what the market gives us. We don't just, pretty much guess what's going to happen next. The market would tell you if you just be patient.
And I'm going to be targeting that level right there. All right, the market opens in 1 minute and 34 seconds, and I am going to get ready to start screen recording, and I'm going to start looking for options contracts. So it looks like you're going to get to see a live market open trade. We're going to be here. I'm going to go to Netflix, trade options today. I'm not going to get a lot of these because first off, you're going to start off, see how cheap they start off. And second off, you're going to see how fast they can make money should this go our way. So yeah, I'm going to delete this zone right here because that's irrelevant now. And I'm actually going to set my stop right there. And maybe the entry will be somewhere right there. So yeah, and I'll be looking.
So that's another thing, man. If you got a plan, stick to your plan. Do not deviate from your plan. That's the difference between a disciplined trader and a gambler, or you know, you have to stick to your plan. This guy had a plan, he did not stick to it.
At this contract right here. I'm gonna hit buy. It's not open yet, and maybe we'll look at doing three. If it's around $100, we'll do three of them. All right, the market opens in 8 seconds. It already did this come down part, and the market's about to open. Okay, it's coming down. It's coming down. It just broke the level,
It broke the level.
or it quickly wicked it. If it comes out of this, I'm still going to get in the
No,
trade.
he said if it breaks the
All
level,
right,
he's not
so
getting it.
now that kind of defeated my plans. Forget this. And now I gotta look for a new level.
Now, if you watched my previous video, where do you see a support level at? I see a support level right here. This candle and this candle. I would like to see the third touch. If this come down and touch this level right here, that's a support level. So, I mean, we got one touch, two touches. This come down, touch that level and bounce up. The candle got to close and bounce up. That's three touches. Now I will get a call. All right. Uh, but the market has to show us what's it's going to do. And we can't just guess. We got to see these candles close. Right. I do like the fact that he went over to TradingView. Right. TradingView. This is TradingView platform. And he charted his play to see what he's going to do next before he took a call over here. Right. That's why I say that's why I gave you guys in the previous video TradingView. You go to TradingView, you look for setups before you take a call or before you trade futures. You gotta, look for setups first. And just starting off, we're looking at support and resistance levels, and we're using trend lines to find these levels. There's more tools you can use, but for now, this is what we're gonna focus on, right?
Oh no, no, it's still going. I'm going for three. Still got the same target.
He didn't wait for the candle to close. The candle has 4 minutes and 27. This is a 5 minute chart. Yep. See, look, it's highlighted blue. 5 minutes. This guy didn't even wait, right? The game is about being patient.
All right, so bought it. How I just showed you buy the contracts. You zoom in, follow this play, and you can see we are currently.
Down $36.
Oh, it's not moving the quickest. Okay, this is going against me. So this is how you.
He said he had a stop loss. Stop loss means the max you're willing to lose at this level, right? At the beginning of this video, not the beginning of the video, but when he went over to TradingView, he's letting it fall all the way down here. He's not sticking to his plan. He also said if it breaks this, he's not taking the trade. He's not sticking to his plan. That caused him to lose $234 on one contract. I mean, he spent a lot of money on this contract, but as you can see, I think he spent $600 and he lost like 240 already. That's why trading we want to wait. And then it looked like it's falling to the level where I said the resistance is at, right? It's look like it's falling to the level. We need to wait till this candle close to tell us what it wants to do. This candle can come all the way down here, and guess what? It can trade all the way back and come green and come all the way up here. We don't know what it's gonna do, but we gotta wait till it close. It gotta tell us what it's gonna do. We can't guess, right? But that's what we're gonna learn. because and trust me, same thing he's doing. I was doing it years ago. I was doing the same thing, you know. So sometimes I still do it because I'm making impulsive moves, right? When you see it, like, oh man, you don't want to miss out. You want to make money too with the market, so you just get in, thinking the market is going to leave you. But and sometimes it does. But if you if you're not waiting for confirmation, you're not waiting to see what the market is going to tell us. You can't lose money. You can lose money fast. All right.
You lose money trading options. So I'm going to sell out of that. I'm going to sell out of all those because it fell through my level, and this is the risk of trading options. Just lost the grip right there. So as you saw, my first plan did not go as planned. But in that first trade, you saw me buy the contracts, you saw me sell out. So hey, we'll just call this a tutorial on how to trade and how not to trade. So if you enjoyed this video or
Yeah. So again, this was a great video to show you how to create a Robinhood account, how to trade, how to open and close contracts, but it also showed you what not to do. And that's the best way to learn, to show you what not to do. You do not want to trade like that. We want to wait for our setups. We want to wait till it, as of now, we want to wait till it hits support and resistance levels before we enter on trades. We don't want to just jump in because we feel like the market is going to take off and we're going to miss out on making money. No, we're going to wait. We're going to be patient. But overall, this is a good video on how to create your Robinhood account. All right, Tom, I'm out.
learn anything, be